Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I have a number of symbols to go through, but I want to start with a lesson, and I want to do something a little bit different. I want to talk about what Van Tharp would refer to as rules-based discretionary trading. And I think this is a great way to operate. And I think in the environment we're in, I think it's a good time right now to take a step back and make sure you have some safeguards in place to prevent you from just kind of going off the rails if you're having kind of a rough period and just continuing to put new trades on one after the other, or not having a really solid approach or plan whenever you're putting on a trade. It's based on more like fear of missing out or fear of losing money. You might miss trades doing that. So I do want to talk about rules-based discretionary trading, and I'm going to give you some guidelines that I think are more like samples. They don't have to be exact of the way I'm showing them, but I think something along these lines would be good to have as a part of your trading plan. And then I'm going to show you a specific example of where discretion can come into this type of trading and how I go about using it as I go through my trades. So let's go ahead and get into these guidelines. So first one, as an example, is I never risk more than 1% of equity in any specific trade. Now, you can go up to as high as 2%, I think. Going above 2%, you're going to see really huge swings in your equity line if you go above 2%, I think. And so I'd be really careful about that. Now, just keep in mind, I'm not saying to risk 1% in each trade. I'm saying 1% to your stop. So if you have a $100,000 account, you'd figure out how far your stop is from your entry, and then figure out how many shares you could buy to risk 1% to your stop. So like I say, just be careful about risking more than 2% because you're going to get big swings. Even with just a couple losses, you'll start to feel, it'll make it very difficult for you to take the next trade sometimes when you take a couple, 2-3 losses in a row when you're risking 2% of your equity each trade. The second one is using specific conditions. Now, you can use the moving averages, you could use MACD or ADX, but I really like to use a say market cap or volume screen to reduce it down. If you want to take it further than that, I would use MA lines first. And I really do like to eyeball the MACD and the ADX. Now, what I do in my screen, so what this ends up doing is it takes a list of say 3,000 stocks down to say 300. And then from there, you've got to do some work to get it down. You're going through those 300. But for me, and again, the subscribers get from my research is I go through all 3,000 myself and take it down to 300 for the week, and then I'll go through the 300 and bring it down to about 30 stocks, depending on the type of environment we have. It might be less in an environment like this if I'm looking for longs. It could be a lot. It actually could be harder for me to keep it at 30 when we're in a really strong environment to the upside. But the bottom line is you need some approach that it takes the list down so that you're not sitting there wondering which stocks do I do, or going through 3,000 stocks in any one week would be very difficult. So you've got to go through some kind of an approach to bring it down, or you could be a subscriber to my research. Now, the next approach would be to have a stop, a target, and a trailing stop method before entering the trade. So that would mean if I buy a stock, I already know where the stop's going to be. I already know what kind of target areas I'm going to be using, and I know if a stock moves up a certain amount, where I'm going to raise the stop. You're going to have that whole approach in place. I'd also say make sure you have some kind of a risk-reward approach to every trade, meaning a minimum of criteria of say 2-to-1 or 3-to-1, something like that. Have that in mind on every single trade. And then a few others that you could think about would be like never risking more than 3% of equity in any one sector. Because if you think about it, if you put on 3 or 4 or 5 energy stocks at the same time, you're basically putting on one trade because there's so much confluence amongst the sectors and the industry groups right now that, if you were to put it in energy, you're pretty much energy is going to do the same thing. All energy stocks are going to do the same thing. So you're putting on a lot of risk in a single trade, I think. The other thing I would tell you is, let's say you go through 2 weeks of swing trading and you're down 3%. You've closed out trades and you're down 3%. You probably want to think about stopping trading for the rest of the month and then reevaluate for a couple weeks and then say, start up the next month. But don't just keep trading if things aren't working, and you pick out whatever time frame you want to use. I like doing it for the month in swing trading and the quarter for position trading. So those are a few ideas for guidelines or rules for this type of trading. Now let's look at a discretionary example. Let's say you put on a swing trade off of a pinch play. We get here crossing the zero line. We got red DI improving, and it gapped down, so you have to wait for it to rally a little bit. But then when it comes back down through the open, you go ahead and short it here. You put your stop above the previous high, and you've got a target down in this area down here. It goes in your favor. Have a really good day, another really good day, another really good day, and then you get a big gap down, and you're pretty close to your target, but you're not there. Trust me, I used to do this. I used to sit back with my limit order right here, and I would say, I'm not taking this. I'm being disciplined, and I'm going to wait for this target to be hit. And the reality is that this is where discretion needs to come in. I mean, the reality, you've got a great trade on your hands. You've made about 70 to 80%, maybe even more than that, of your target. And the odds of a rally coming are pretty big. And we're talking about short-term trading. We're not talking about trend trading. If you're talking about trend trading, then you'd have a different approach. But in this situation, I think you have to take profits here. So this is where discretion comes in when you're a shorter-term trader, whether to the long side or the downside. You have to have some areas where you're kind of thinking to yourself, okay, I know what I'm looking to do. I know what my target is supposed to be, but I have to use some of my knowledge and intuition and just common sense to say, you know what, in this situation, this is where I should be looking to take a profit as opposed to waiting for my limit order to be hit. So those are a few ideas that I think you could incorporate. Put together a plan before you trade. I think some of these ideas can help with that. Let's go ahead and get into the individual ideas now and do some analysis. Just briefly, my services can be found at RabilStockResearch.com. The individual package has 2 to 3 reports each week, plus a special video for that package. If you have an interest in giving it a try, you can use a coupon code StockTalk and get the first 2 months for $50. Let's go ahead and get into the analysis now. So I'm very excited about ChartCon this year. It's on October 7th and 8th, especially now that I've heard a little bit more about who's going to be presenting and everything. It should be pretty fun. I'm going to be doing the technology and the deep dive of the sectors, and I'm also going to be in a bull bear debate. So should be a lot of fun. Check it out at stockcharts.com/ChartCon. Okay, so most of you know that my thoughts on the S&P is anything below 4,000 is a really dangerous position for that index. So I'm not going to go into that anymore this week. But what I want to do is take a quick look at the sectors very briefly because I did get some late symbol requests and I want to try and get through all of them. So let's start with the XLB. I mean, one of the things that just kind of bugs me when I look at this is you can see how this has this topping pattern in place and how we just failed at resistance after breakdown, failure. I mean, I don't even have to look at the indicators. I can see the price action is pretty ugly. I also want you to focus in on all these sectors and look at what the 18-month is doing. So this is very, very close to turning down. Officially, it is negative right now. And we've got still got some room before we get to the zero line in this situation. So there's some risk here. I think obviously watching how this handles the 70 area will be important. So XLC is a little different. Do you see how this broke the 18-month back here right at the beginning of the year and has been trending down for the whole year? Look at the reversal here. Look at the zero line break here and where red DI started to kick in this long downwards move. Now, this is the first time we've made a lower low and MACD is not confirming. So that's potential divergence. That doesn't mean it's divergence. The price is going to have to come back up through this low, and we're going to need to see, MACD turn up. It might come back down through the signal line, then back up, or it could hold the signal line as price comes back up through here. And then I would consider it divergence. Right now, it's just potential divergence. So if this keeps weakening, the MACD could eventually confirm, especially based on the fact that it is still ugly here. But this is the first sign that we're starting to see a slowing of momentum. Now, I think energy is a little different. Energy is still holding the breakout area on the monthly chart. Really good momentum conditions in place. And even though we had a harsh move on the first leg down, the sellers are not very strong here. You can see that in the red DI not being above 25. I kind of still of the opinion that this wants to consolidate a little bit more before breaking out, but very bullish overall condition in place. Now, XLF is a little bit more like the XLB in that it topped out, broke, and then it just failed at resistance. This resistance zone here going across, we just rallied up and failed at it. The zero line failure looks like it's taking place as well. And we had a rejection at the 18-month line. So the difference with this one is there's a decent amount of support at 30, maybe a little under 30. I don't think the downside is significant, but there is some risk in place right now in terms of the trend. When we can look at the same pattern developed in the XLI, the difference again comes when we look at support. So we want to go and look at where bigger support is. In this case, it's probably 77, 78, something like that. So there's a little bit more risk than we have in financials, I think. And I am looking for these lines to come down a little bit closer to the zero line. So I think we've got a little bit more time that's going to take place. Even if it's not in price, I think it's going to take some time. Let's look at the XLK. Now, this is one where we've got a little bit of a problem when it comes to support. We do have a little bit of support here, but the bigger support probably comes down closer to 100. Now, I'm not necessarily calling for another 25% drop in technology, but I think we have to stay open to that possibility simply because we're failing at this 18-month line. We have a trend to the downside. We just had a failure at the zero line, and red DI is in control on the weekly chart. So these are all negatives. How this reacts right here at these lows, I think 125 area, I think will be really important to see. It's very possible we could undercut it and then get a rally, and we're going to have to, watch every rally in every one of these sectors. The quality of the rally will tell us a lot. If we get some kind of a strength, especially any kind of strength in the plus DI, then we could be setting the stage for some kind of a bottom in place. But first order of business is seeing how this reacts at 125. XLP still has a rising 18-month and a rising 40-month. It's just about to break the monthly 18. It's more of a neutral pattern with a lot of support in the high 60s to 70 area. I don't think there's a lot of downside risk here. One of the things that I keep eyeing here is the relative performance. This is trending up for this year. You see how the trend started up and we're making higher highs and higher lows. As long as that continues to be the case and we stay above the moving average, this 30-period moving average, then I consider this to be okay. Now, the real estate area failed at the 18-month. And then we got this kind of same topping pattern that just failed at resistance, which happened to be the 40-week. Same thing with MACD. Now, there's not a lot of strength in the sellers here, but I think, and we are coming into some support, probably not that far away, probably right around 35, 36 for the XLRE. But it's another one where the trend is down, and we've had a lot more weakness recently. You notice how the ADX is showing more strength recently based on the seller. So we got to be real careful in the short term and just see how this handles that. XLU along with XLE are the only two sectors that are still in uptrends. They're above their moving averages on the monthly, and they're above their moving averages on the weekly. Now, what's missing here is momentum. We don't really have very good momentum in place. We never really got this cooking. It was pretty good back here late last year, but this year, because the drops have been deep, it's really made it difficult for the blue line, the ADX line, to get going. So I don't see a lot of strength in this. I could continue to see the relative strength line move higher though, just based on the fact that it's holding up better than the market. So healthcare is similar to the consumer staples in that we still have an uptrend in place, but we're starting to break the 18-month line. I mean, I don't consider this to be as egregious of a rollover. As I'm not as fearful of a big drop. But one thing I'm watching pretty close is how this handles this moving average. So if the relative line starts to weaken and break its moving average, and we lose the relative component here, then a breakdown to the downside starts to mean a lot more to me. We don't really have much downside momentum right now. So we'd be looking for some kind of a breakdown if that's going to take place. But just looking at the bigger components in the XLV, I would view this more like a trading range sector as opposed to a big down sector. Okay, so let's look at the last sector here is XLY. Another failure at the 18-month line that's now declining. Now, this is further down. It had a bigger drop. We're getting a little closer to the zero line, but we could still come down and test these lows and still be kind of a part of a consolidation pattern. I don't know that we're going to actually go to a new low in this sector, but I think there's risk in the short term of this wanting to test a little bit deeper. So got to be careful in a sector like this because the trend is down and we're rebreaking the 18-week. Our support is a little bit lower, so just be careful from that standpoint. Not the type of thing that I'd want to be overly aggressive on. The one thing that's got me interested is the relative strength line improving, and that's why I'm thinking these lows are going to hold on a pullback. But we have to keep an eye on this, and if this starts to re-break and show a lot of weakness on the next sell-off, or if we get a sell-off or not, we got to keep an eye on this relative strength line. Okay, let's start working through the individual questions that came through. So AG Growth International, this is on the Toronto Exchange. And I know when the question came through, it was looking more like a cup and handle potentially, but I view this more like a big wedge forming. And you could use either one of these trend lines really, and you've got a wedge forming. I don't think anything is happening yet. You can really see it on the monthly sideways moving average. We're still below the zero line in MACD. We just don't have any momentum in place, so you got to wait for a breakout. And I would use that trend line up here as my breakout point, and I'd watch to see if green DI is kicking in while that's happening. So on the short side for Google was the question, can this be played on the short side? And the way I look at it is, I think the last entry was right here on a pinch play where red DI started to take over again. Okay, now we had a signal right here, and I'm just going to let you know. I mean, using my approach, we had low ADX, we were at the zero line, we were rolling over, we broke the trend line. It was an opposing trend trigger to the downside. We were failing at the 18-week, strong here, and that was a failed signal. You would have gotten short, and you would have lost a little bit of money as this kind of came back up through either the trend line or the moving averages. That's the way I would look at it, or this prior high up here. Now, you got the second signal and it's working really well. And in fact, there was another one, but the signal ended up triggering on a gap. Now I think I would be looking for a rally here back up towards this moving average based on the strength here. Look for some kind of a little rally and see, if it's mild again. If it's another mild rally like we saw here, then you could play it off the daily that way. And that could be right around the breakdown point. It's hard to play this off the weekly again. That was really the last signal, was this move back into the moving averages. So we're going to have to wait for another rally towards the 18-week to get a weekly signal. We do have some support coming from the 40-month moving average, but price support is a lot lower. There is some risk in this. Canadian Pacific. So we've had some rough times here with some of the rails, and this one's still holding up much better, but it had a failed breakout here, it ended up coming back, and now it's doing that again. Now, I think there's pretty good support underneath. I don't put this in the same camp as some of these others, like what we saw in some of the other rails getting hit, but I'd be inclined to think that this is probably going to be in a range, continue to be a range for now. Since we didn't get the ADX to really break out here with and confirm the move, it's probably caught in a range. Not a whole lot to do right now, especially based on the daily chart. Okay, so PDD. We got a rally on this time frame where we came down and kind of made a spike low and worked sideways, but now we've kind of worked our way back up and now we're hitting a declining 18-month again. So I'm less inclined to want to play this kind of reversal pattern here because I know I've got resistance on this time frame. So the way I would play this out, I would say either this is going to fail here, come back down to 50, and then come back up around. And at that point, as it's coming back up, it's going to look a lot better because it's going to be getting through the 18-month. Or just let it get through the 18-month and then look to buy the first pullback. So we've got this kind of resistance area up here. Let it get through that and then look to buy a pullback that way. Let this cross up. Let green get going again. So that's how I would handle it. I wouldn't pre-guess this break of the 18 months, especially because we're still in a bear market and consumer discretionary is hitting a new low. I like the fact that this is holding up. I mean, this is holding up really well, so I would keep it on my watch list for sure. It's all about how you want to handle the risk, and I just think based on this 18-month, it would keep me from wanting to put this on right now. Okay, let's look at ACN. So ACN failed at the 18-month here. All right, now it's trying to hold the 40-month moving average, but I don't see any real signs of a reversal taking place yet. We have a trend line break, so that's one. We're testing the low, that's two. But in this case, I would wait for this to get back above this line up here. And the reason I would do that is because all of this is taking place, so from here down is below the 18-month. And so I would wait for 3 here, and 3 would not only cause this to turn the trend around, it would also get itself back up through the 18-month line. And then I would have a little bit more clarity into what's taking place. Right now, we've got a deep overrun and a failure at the 0 line, it looks like, taking place. Another test of this low. I'm not convinced that this is really ready to turn right now. The weakness is still being controlled by red. We don't have any sign of the buyers really stepping in yet. So continue to be careful trying to step into stocks like this that are below their 18 months, especially if the 18-month is starting to roll over. Okay, so I had a request. Okay, let's first go through the ERF, and then I've got a couple of requests that were short ideas. So ERF, I like what's going on. So this is very similar to what I'm talking about in the energy area. So this is an E&P company where we had a harsh decline and we've rallied back up. I think this wants to kind of do something like this, pull back maybe a little bit more, or just kind of go sideways a little bit more and then try and break out above this high. And I think this could look pretty interesting. The sellers are not in control. The buyers are still in control here. So I think we have to respect that. Notice on the longer term time frame, we broke this downtrend line. We made a really strong move. We got confirmation in both MACD and ADX, and now we're kind of working sideways. So I'm pretty positive on this pattern overall, but it's working through this resistance from this kind of harsh sell-off, and I think it needs a little bit more time. Okay, I got 3 short ideas that I think will help you understand kind of how I look at this stuff. So we have this decline phase. And we get a rally up towards the 18 in this time frame. Now, I wouldn't really consider this divergence because this went to a new low, ADX confirmed, and then we got to move to the upside. But look at the strength of the green. You see the strength of the buyers here? So it actually got higher than the sellers did on their last peak. So once I see that, I know this is starting to turn down, but I'm telling you, in terms of figuring out which ones I really want to play, I'm less inclined to want to play something like this because the strength of the buyers was actually stronger than the last strong peak for the sellers. If we go and look at the next stock, we've got a different situation. We've got strong selling here, and then on the rally up, even though that looks pretty strong, it wasn't as strong as the last selling peak. So I would be okay with watching this for a signal to the downside. Now, what I don't like about this one is the way this rallied here. It's doing this signal where I've got the price going down around the 18 and the MACD going the other way. I don't like this pattern. I think it's going to have support at the midpoint. So that's different than the reasoning here. You see how this doesn't show. We want to make sure that the buyers are not as strong as the sellers on the way up. But in this case, because of the way this is playing out on the weekly, I would not have as much interest. Now, this QNST, once again, not only had a low ADX period, so we had a pretty strong move here based on the sellers, and then we went up, and then it didn't really go down to a new low. It went into a low ADX period and then broke out to the upside. So again, I'm a little concerned about how this has happened, and I think there's a lot of support underneath. You could really kind of line it up right around 10 bucks. So I think there's support right around 10. And I can see that here, like based on the fact that this continued to rally to the upside, the 18 is now rising on the 18 week. And I'm just not as interested in playing something to the short side when the moving average that I'm trying to play, if I want to play this, I want this moving average to be rolled over and rallying to it. And that happened back here, but it's not happening now. So got to be real careful in these trades. I'd be less inclined to do this one now. Thanks for watching the show. My website is rabilstockresearch.com. If you have an interest in sending over a stock request or two, go ahead and send it to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.